Hey everyone, CJ here. If you haven't heard this already, Charlie Munger just bought $40 million worth of Alibaba stock for his daily journal company portfolio. That moves the total portfolio size from 4 to a whopping 5 positions, and that takes up about 20% of the total portfolio. And the daily journal portfolio never changes. I mean, you can see right here that the last transaction that was made was back in 2014 where he reduced his stake in POSCO. So should we follow Charlie into this Alibaba investment? Well, let's find out. I want to talk a little bit about Charlie's investing, the Alibaba business and group of businesses, and the financials for the company. And as you probably guessed, the answer is yes, but with some caveats. If you're a hardcore cloner dedicating to buying only what super investors buy, then you will probably come to the conclusion that BABA will have a place in your portfolio. And while it's far from a sure thing, it's really comforting to know that Charlie Munger, a man of great intellect and experience, is investing very heavily into this Chinese conglomerate. Charlie is famous for evangelizing a concentrated portfolio, and he is willing to sit on his hands as long as it takes in order to wait for that fat pitch that's coming right across the plate. I challenge each and every one of you to go half a decade without making a change to your portfolio. Another core part of Charlie's philosophy is to think about investing as basically evaluating opportunity cost. So because he hasn't made many moves in his portfolio recently, obviously we can see that both the transaction costs or just the plain opportunity set hasn't been motivating enough for him to move out of what he would probably call a portfolio of great businesses that he currently has for the Daily Journal. And Charlie is a major bull for Chinese businesses. He has said in the past that we should always fish where the fish are, and he believes that China in particular is a great fishing pond. And Munger has another connection to China because Li Lu manages most of the Munger assets that aren't tied up in Berkshire Hathaway. And Li Lu is a Chinese native and very familiar with the Chinese business landscape, probably more than any other investor that I follow. Interestingly enough, Li Lu actually owned Alibaba, and so that means that Charlie Munger actually owned Alibaba before in the past. I think Li Lu sold out at the end of 2020, so it is a surprise that Munger is going back into this company of his own volition. Munger is seeing a lot of value here, and I wouldn't be surprised if we see a BABA position for Warren Buffett or even Li Lu. I have to imagine that because of their close relationship, Charlie Munger and Li Lu talk constantly. And I know Charlie is an independent thinker, but I'm sure he used Li Lu as a sounding board for a lot of his ideas about Alibaba. Well, I don't know that for sure, but I sure as hell would do that if I had a resource like Li Lu at my disposal. When I think of a close comparison for Alibaba, I would think of Amazon. They both have thriving e-commerce platforms. They both have cloud computing services. While Amazon's is number one, Alibaba Cloud is quickly growing, and it actually turned a profit for the first time last year. Comparing Amazon Web Services to Alibaba Cloud is a little unfair to AWS. Alibaba Cloud is still in its infancy, and it's not really contributing anything to the bottom line for Alibaba yet. But it's possible that Alibaba comes out as the number one player in China for the cloud computing. They also both have motion picture studios, and I actually watched an Alibaba film last weekend unknowingly. It was Gemini Man, if you're interested. But if you just take a quick look at their subsidiaries list over here on this business card, you'll see that they have many businesses and subsidiaries, and they're constantly growing new businesses. Now, Monish Pabrai recently gave a talk about a new investing framework he calls spawners, and Alibaba is what he calls an apex spawner. They acquire businesses, they clone other companies, they nurture businesses from within and spawn those off. Alibaba kind of does it all. And that's why I'm comparing this to Amazon in my head. Now, that's probably a gross oversimplification, but on the surface, that is so far what I've discovered. Alibaba stock has recently been beat down, and this is probably why Charlie Munger has been so interested and decided to take a big swing on this company. There are a bunch of regulatory issues in China, there's general mistrust in the Chinese government, and there was a big fiasco with Jack Ma trying to bring Ant IPO public, and basically the Chinese government denied him that ability. Actually, at the last Daily Journal company annual meeting, Charlie criticized Jack Ma for being too boastful and arrogant with the Chinese government. To me, it's pretty obvious that Charlie isn't really concerned about any of these risks with China. Quick note on Ant Financial, by the way. Alibaba holds a third of a stake in that business, and I think it's valued somewhere at around $50 billion in itself. Along with the regulatory controversies, Alibaba is seeing a lot of fierce competition from other up-and-coming e-commerce companies in China, such as Pinduoduo, which Li Lu, again, in the last quarter invested in, and JD.com. The addressable market in China is massive, and other companies naturally are going to come in and try and eat Alibaba's lunch. That's just the way capitalism works. Alibaba was founded by Jack Ma in 1997, and so far it looks like Jack Ma is going to be an all-time great businessman with Jeff Bezos, Warren Buffett, and others. Charlie believes that Alibaba is obviously undervalued, and he doesn't seem to be too concerned with any of these risks that I've talked about. I mean, if he were, he probably wouldn't be taking a 20% stake in the company. Charlie really only swings for the fences. Another quick note on Jack Ma, I think this here is his insider ownership of Alibaba. So it looks like almost all of his net worth is tied up in Alibaba. So he obviously believes in this company. Even though he's no longer CEO, he still is holding on to his baby. Okay, we can take a look at some of Alibaba's competitors at a high level. And as I was saying, I was comparing it to Amazon. At least Ticker believes that Amazon is also a direct competitor of Alibaba. We also have listed here Pinduoduo, JD, and eBay, and Etsy, just to name a few. Let's look at the financials on Morningstar. And just as a note, all of these financials are going to be in Chinese yuan, not in US dollars. So first thing I want to point out is their net cash position. They have 462 billion versus a total debt position of 120 billion. So that's about 340 billion yuan in net cash. Another great thing about Morningstar is this top panel here on the financials page. We can see that their price to book is 4.3 and their price to cash flow is about 20. Some other pretty outstanding numbers are these 3-year annualized growth numbers. So they've been growing their revenue for the past 3 years, annualized at about 50%. Their net income at about 50%, and their return on equity is about 18%. These numbers are just ridiculous. Now let's compare some of these numbers to Amazon, where we can see the price to book here is about 17.5. That was compared to a little over 4 for Alibaba. And the price to cash flow is 25 compared to 20. Amazon, of course, also has excellent growth. Their revenue is about 30%. Then their net income is 3-year annualized at 92%. So it looks like they are starting to convert more of their revenue and growth into actual income for the business. Alibaba is still growing rapidly. And also Amazon does not have that big advantage of having all that cash on the balance sheet if you consider their debt. But Amazon is a more mature company, so that load of debt isn't too troublesome. They're probably continuing to finance their growth with debt, and that's okay. And if we come to the key ratios page for Alibaba, we get some more long-term growth rates. So for instance, if we wanted to do a discounted cash flow, we could use any combination of numbers from here to kind of suss out what the approximate value might be for a company like this. If you look at their 10-year average revenue growth, it's 63% and 64% for their 10-year net income growth. I mean, this company is just skyrocketing. But again, what has happened in the past is exactly that. It's the past. We can't really extrapolate too reliably on what has happened in the past for the future. That's where the ability to evaluate a business's prospects really comes in handy. But we can use these numbers for ballpark ranges. And for calculating intrinsic value, that's all we're really doing is looking for ballpark ranges. I should probably do another video on this topic entirely, but especially if you follow super investors closely, I would take Charlie putting 20% of the Daily Journal's portfolio into Alibaba as basically a big green light and all systems go. Now, I'm not suggesting that you go out and buy the stock without doing further research, but I am saying it's probably well worth your time to look deeply into this company. Yes, there's a possibility that this stock goes up many multiples from here, but it's probably not going to be a 100 bagger. It's just in the nature of how large the company is. It's not going to be able to sustain these growth levels forever. And we don't want to do research just to confirm Charlie's conclusions. We want to actually try to disconfirm his conclusions. That's more important than anything. So I know I'm going to be looking for more bear cases than anything. At first glance, this investment does seem knowable, but it does not seem straightforward to understand by any means. First of all, we have the international barrier where I, as a US citizen, don't really know much about the Chinese business landscape. And in addition to that, the company is massive. I mean, they have so many business operations, and trying to figure out what operations are profitable, are going to be profitable in the future, and what those numbers look like at all is going to be extremely complicated. And we can try to use heuristics to try to reduce the amount of noise that we're hearing and just focus in on the most one or two important levers that are going to be really impactful for Alibaba. You know, Charlie can probably do that in the snap of his finger, but here we are. So based on the financials here and the fact that Charlie has taken a swing after so many years of not doing anything with his portfolio, I'm definitely going to dive a lot deeper into Alibaba. I'm not one to second guess Charlie Munger. I mean, he's my biggest investing hero, and I really want to know more about what he sees in Alibaba and see if I should take a pretty big position in my portfolio as well. If something has passed through Charlie's filters, especially something that ostensibly has a little hair on it, then in all likelihood, we're probably going to see a pretty good outcome. So should we follow in Charlie's footsteps and invest in Alibaba? I mean, in my opinion, you could do a lot worse than follow one of the greatest investors of all time into a high growth, high profit business in a big expanding market. But that's just my opinion. Again, please do your own due diligence, your own research, and hopefully this has helped you come to a little bit of a conclusion about where to get started with Alibaba. You could approach this one of two ways. You could simply copy Charlie completely and put 20% of your portfolio in Alibaba. I don't know if I'm comfortable just outright cloning in that method. I definitely want to get more information about the company, deep dive into the financials, read a bunch of reports, and do more due diligence in general. Please let me know in the comments below if you found any great research either for or against the investment case for Alibaba. I'm trying to collect a lot, and I'll probably do a bigger video on Alibaba in the future. If you like this video, you may enjoy my video over here where Monish Prabhat talks more in depth about his spawners framework. Anyway, I've gone on long enough. We'll come back to Alibaba in another video. Anyway, I really appreciate you all sticking to the very end here. I thank you so much for watching this. Please like the video and subscribe to the channel if you enjoyed it, and I will see you next time.